Real quick, so I'll give you an idea of how I scalp. So the first thing I do once I wake up in the morning, like for example, right now I'm finally sitting on my desk. I just had my coffee, and why not look at my 4 hour? Where is my 4 hour? Is my 4 hour still bullish or bearish? Most important thing I look at. These are the indicators that I use. Right, 4 hour. We're over under. We are bullish officially on the 4 hour. Yeah, you might get a micro move down and whatnot, but for the most part, we are bullish. Right. So any kind of short I take, is going to be a scalp short. Right. Until my 4 hour again gets somewhere in this red zone up here, or like for example, right, red zone up here, then it got rejected, or it gets close to the mid equilibrium line, right? So just keep this strategy in the back of your head. If the 4 hour is either at the red zone or the equilibrium, which is orange, you might feel safer with shorts. Until then, if you have an over under, it's basically by the dip opportunity. Now, 4 hours bullish. Go flip onto your 1 hour, right? 1 hour. What's my 1 hour saying? I'm exhausted, but we're kind of far away from each other, right? So that means that there's potential that we might cross down to meet each other like a magnet, but my RSX isn't exhausted, so more likely than not, it's not going to happen. You want both indicators to be exhausted to confirm that the trend is there's the probability of the trend reversing could happen. So the Stoke and the RSI are completely different indicators. So when you have both of them acting similar, for example, if you have the best of both worlds when both of them are telling you that we are exhausted in a specific time frame, right? If you only have one, just half risk it. Don't go full position. Go to your 15-minute real quick. So your 15-minute is showing you that you're shorting over here. We have a short. So the 15-minute has a short, right? So if the 15-minute has a short, ask yourself two questions. Am I at the red zone? I am. Awesome. Am I at the red zone? I am. Awesome. This automated trend line above us, you're going to get access to it. Where is it? Trend line right here. You're going to get access to it once the beta is over. We're still working on it, or John is. So you can tell that there's liquidity and a trend line above us, which has me worried that this is going to create some kind of bullish formation to pump up and tag this before any serious retracement back down here. But I mean, this is just me assuming. I don't like projecting. I like to react. So get rid of this high low. So the way I will play this 15-minute short, right, is my 15 minutes punting a short. I look at my oscillators. My oscillators look good. All right. Short. Oops, short. Okay, so we're exhausted. No cross, obviously. We're exhausted. Let me just make this clear. The RSX is slower than the Stoke. The reason why the Stoke is so significant is that it catches the move before the RSX can. The RSX stamps it. So if the Stoke has an over under like the way it does over here, the minute your RSX crosses, which it crossed over here, move your stops to break even, because this is a risky short. I'll tell you why this is a risky short. See how beautiful this short panned out over here? It went back down here. I'll tell you why. So I don't even know how to explain this. Okay, I'll explain it to you this way. 1 hour. 1 hour is exhausted. 1 hour is exhausted. 1 hour is exhausted over here, but it's not exhausted over here. So technically speaking, we're still going to pretty much jerk off over here a little bit before we make a significant move in the other direction. If your 15-minute is painting a short, let me see it one more time. Look at your 30-minute. Does your 30-minute look good? Do you have a cross? Okay. Are you over under? Okay. You're not. Half risk this short. If you're going to take it, half risk this short. So what I mean by that is go half position. The signal came at this specific candle. Put your stop loss above the wick of that specific candle. Target your equilibrium, which is that orange. Bands are pointing up, right? Bands are pointing up, so be very cautious. So if bands are pointing up, plus you have your 1 hour that's still not exhausted, it's not a favorable short, right? Your 4 hours bullish, your 1 hour is not exhausted yet. Look at the distance between your Stoke and your signal line. Massive distance. 45-minute painting a short, but we're resting above the mid. That's not something you want to see if you're in a short, right? 45 minutes not exhausted. 30-minute is exhausted. but we're not under the signal line. So no, if I do take this short, I'm going to punt my short over here, put my stop loss above here. The minute I cross my RSX, which again, the RSX is a delayed version of the Stoke. So the minute you cross down the RSX, move your stop losses to break even, because this has the potential to form some kind of bull flag formation here, or a wedge, or I don't know what it's going to form, right? And then it could possibly pump up. We got a trend line above us. The trend line above us is at the liquidity area. So chances are it's probably going to go hunting for this liquidity area over here. That's how I'll play it. So if you're 4 hours bullish, to answer your question one more time, if you're 4 hours bullish, this is bullish. The only resistance you have is the gray zone. The minute you break above the gray zone, don't short this until you go back to the red zone, right? The minute you break above, you see how the gray zone rejected us and went back down? All right, if we get rejected here and go back down, another long opportunity. We're not going to break under the signal line, man. In a healthy market, you don't go up, over, retest, up, and then die again. Does not happen. The minute you retest your signal line, you stay above it in a healthy market. So if we do happen to dip, it's a buying opportunity. The signal line will support us. This is going to be a safer buy than this, by the way. So if you get a third retest, well, it's a second retest, right? A third, basically 1, 2, 3 bottom, a third bottom, meaning a third drive. 1, 2, 3, right? Makes sense if we happen to get it. This is going to be, go full size. Go full size. Risk management, full size. Go bigger than you can. It's going to work. It's going to pan out. I'm being honest, man. I know the indicator very well. But anyway, based on behavior, if you're 4 hours bullish like this, don't be so quick to punch shorts, man. And if you do happen to punch shorts, move stops to break even quickly, because it's a risky short, dude. It's a risky short, It's a risky short. The only thing you want to look at, first thing you wake up in the morning, 4 hour, bullish, bearish. Okay, we're bullish. All right, so now if my 1 hour paints a short, which it's not, we're not exhausted at all, just this. Don't look for shorts. Wait until your 1 hour confirms a short before you actually pull it. Your 15-minute is at a red zone, which is beautiful for a short plus a signal, but it's not in sync with the uppers. Again, I would take it half risk, but just move stops to break even as soon as your RSX crosses. Version 2 of the RSX is going to have a highlighted area where the cross takes place, so you get an idea of where the cross happens. At that moment, move your stop to break even, so it's a risk-free trade. This way, if it does happen to break up, which I think it will, you don't get stopped out and lose money. At least you get stopped out in profit. You see how we're already curling? That means that the gray is going to support us on the 15. So if the gray supports us on the 15 and the 4 hour is bullish, I mean, there's only going to, there isn't much you could say about shorts over here. Nevertheless, I'm not telling you not to take the signals. Take the signals. Take them. Take them if you want. But just move stops to break even. And always have liquidity in the background. Look how beautiful these line up. Let me just get rid of this real quick, man. Just look at it from this perspective. Don't look at the past, because these lines are not, they get updated on the fly. There's liquidity here, which we tapped. So ideally, after tapping the 100x, you usually want to see us tap the 100x longs, right? But in a bullish formation, we find support. We go up and we tap this. We tap the 50x. Then you could assume that we're going to go back down to tap the 100x. So put liquidity in the background. You have the 25x, the 50x, the 100x shorts, 25, 50, 100x longs, right? So don't be so quick to short this. Yeah, it's creating a bullish formation right now, dude. Definitely don't be so quick to short this. Let me see. See? Already bouncing. It's not something you want to see if you're bearish. 30-minute. I'm about to cross. Yeah. 1 hour. If my 1 hour was exhausted like this, I tell you take it. But it's not. And it makes a world of difference, because the 4 hour is still bullish. Yeah, might just go like this and then roll over. I'm not saying it's not going to dump. Just saying it's a risky short. That's all I'm saying. So move stops to break even as soon as you get your RSX to cross on the time frame that punted that signal, right? Punted that signal Move stops to break even, right? Let me put on my bands again. Yeah, that's pretty much it. Hope this helps. But that's what I do. If my 4 hours bullish and I get a short signal on the 15, if my 30 minute and my 1 hour or 45 minute is not in sync with me, I know the 45 minute is painting a short signal, right, dude? It is. But I don't have my confirmation. I don't have my confirmation, right? I want to see double exhaustion, and I want to see the signal line as close as possible to the top. Don't forget, this signal line over here is significant, man. You want this thing to be as high as you can above the gray neutral zone, right? You want it to be as high as you can, like up here. It's perfect. So the 15-minute short over here will be perfect if my 1 hour was exhausted and my signal line on the 1 hour was closer to the top, right? Hope that helps, guys.